Good day, everyone. Today is March the 27th, 2026. It is 11:20 a.m. Eastern Standard Time. I wanted to have an entry to answer a question from a new premium subscriber, premium member of Read the Report. So let me just talk about that for just a second for folks who are new to Read the Report. As far as what GTC Traders is looking to do, I have mentioned in the past, and I have no problem saying this, at all. I'm not threatened by anybody, nor do I, necessarily need GTC Traders, right? This is a passion project of ours. I phrase things very carefully because I'm very well aware of regulations. I have institutional experience. At the same time, I'm the senior partner of a private, not open, not funded, private proprietary trading firm. And I've been doing this for 3 decades, right? Now, this next part I say because I want to make a very specific point. There are other guys like me out there. I am not unique, and I think that is a wonderful thing. I've mentioned some of them in the Twitter stream, David and others. I think they are. This is what I want more of, right? There's another guy out there. It's like, oh, somebody's selling something on Substack for readers and views, and that's just nonsense. And he likes to be a sophistication gatekeeper. All right, fine. If you want your nose up in the air, that's fine. I really don't find your stuff that interesting. And somebody can only crap post in social media streams for too long before it becomes monotonous and a bit of a bore, right? That's a side tangent. Regardless. There are so many more guys with institutional background, and the second you read their stuff, like Cox, this is a guy with extreme institutional experience, right? I say he's probably forgotten more about money markets than I ever learned, and I'm no slouch, okay? But GTC Traders has a very, very specific mission as a side passion project of ours. Is we hope to bring that to bear for folks, but it's especially geared for folks who are new and aspiring retail traders, because I feel there's a real gap there. There's a lot of really good publication, way more than when I had my first go around at mentoring traders, like, what was that, 16 years ago? There's a lot of good institutional research out there that you can peruse. And I wholeheartedly encourage folks to. But is it geared for the brand new and aspiring retail trader? Because I with some of it, I see that it's so good that I think newer folks are going to get lost. And it's just going to be beyond them. I mean, it's so good that I guess I would say that as a compliment. It's so good, it's going to be a bit beyond them. Okay? And despite my experience in 3 decades in, and some of the people I talk with on a daily basis, I still feel very deeply for the new and aspiring retail trader. And making things I also have, I've actually been a teacher in our congregations for longer than I've been trading. So I have a lot of experience teaching as well and trying to make concepts simple, okay? So I say all of the preceding to say that's who we're geared for. We're going to try and take institutional, professional experience with folks who are quantitative strategy architects and the like, extreme experience even from the legal aspect of regulations, and bring it to bear and boil it all down for folks who are, newer aspiring retail traders. I say all of that to say, all of the preceding to say that we got a question from a newer premium member, and we encourage that. Now, obviously, we don't have the time to do these video entries all of the time, right? Our time's pressed, but we do like to do them from time to time. So let's go through that question, and I want to break it down and answer it. And again, I said all of the preceding to say we encourage questions. This is not a trade alert service. Think of it more as I've heard this before, like a mentoring service or a dojo, right, where you can ask people with extreme experience. So that being said, let's get to the question. Basically asking me, are you short gold and silver because you're saying you're bearish? Excellent question. This touches on something that I've had a very, very difficult time explaining, to be perfectly honest, for newer and aspiring retail traders. To sort of explain this, I need to explain the way the institutional world works, and why it works so well to do that. And I think this is an area where a lot of retail traders need to pay attention. Okay, because I've mentored traders for many, many years. Okay, and something I've noticed, and I'm not saying this about the person that asked this question, not at all, but in the past is people don't want to put in the work. And they're like, yeah, and they'll offer this excuse like, yeah, that's good for professional guys, but I'm just a guy trading at home. Let's break that down just a little bit. So in other words, firms that get to be handling, it depends on the kind of firm, right? Like a CTA is going to, handle anywhere from $10 to $50 million when they're brand new. And then if they're established, they're over $50 million. Or an equity firm, right? That deals in equities and they're dealing with billions of dollars. Them doing something and getting to the level where they can handle that sort of AUM and have established that sort of trust. Why wouldn't you want to copy what they're doing? Like, don't you think you might be able to learn something? And I'm not saying about the person that asked this question. I've just noticed this as an attitude in the past with other people. It's like, why in the name of God would you not want to look at maybe some of the processes of what ones do in the institutional world? Don't you think maybe there's a good reason why they established that trust? So, that being said, you're saying you're bearish on gold and silver. And yeah, we've been saying we're bearish for a little bit now. But am I short? No. Do any of the portfolios I manage anywhere in any situation, have short and gold silver positions? No. So where they would have taken this from is our daily note. So let's go over to our daily note. Okay, so this is something that premium members get, right? Our daily note that we put out each day. Now, let me talk about this daily note for a bit. It should be very simple. I think everyone should do this. You should have some sort of daily note. GTC Traders is not unique because we put out a daily note. All right? This is not a GTC Traders thing. Every professional firm out there, maybe not every, maybe I'm speaking in a bit of hyperbole, but most institutional guys, most professional firms, larger private proprietary firms have some sort of inward-facing note that they put out among the partners, right? And it's generally very brief. It's not quantitative. It's not, actually, our note is probably more developed than most. And I don't say that to say we're so much better than them. It's because I'm a bit OCD, and I sort of insist on a few details. Most notes at most firms are very, very, very brief, and it's just the start of the day, right? So if you look at our daily note, and some of this we mention in these links. If you're brand new, I know there's a lot because we give you like, hey, look at this and look at this and look at this and look at this and look at this, and that'll catch you up. And I know you get that in the welcome. Regardless, follow these links, right? And it'll explain a little bit about the daily note. And again, this is not unique to us. It's a discretionary view as to the state of markets across multiple markets in an attempt to understand the initial conditions or the right now of econometric data. Okay? We go over some of the more major, there really hasn't been a lot of major sort of econometric data released this week. It's not been a big week. But we release the ones that we think for the week are a bit larger import, okay? So, and then in this environment, I'm more concerned about, okay, do we see that report as neutral? Do we see that report as deflationary, inflationary? How do we read that? We might give you a couple more comments on it like this. And then we just go through major markets. Even though GTC Traders deals explicitly with equities and equity ETFs and individual, equity companies. We do look at short-term interest rates because interest rates in general rule the world. Everything is decided off of an interest rate, the cost of money and the cost of time, right? So we've always said, hey, if you're going to look at short-term interest rates, we think the first red in the STIRS pack is a good place to start. And I do realize the more I talk, sometimes the more I realize I'm using sort of more developed terminology that you may not be familiar with. That's a good thing. That's a good thing. It's like, I don't even know what are you talking about? First red, third red, first green. What are you talking about? When you hear terms you don't understand, that's a good thing, right? Because all the gurus out there won't tell you things like that because they have no concept. They're scammers, right? And so when you hear something you don't know or are familiar with, again, as we were saying before, please ask questions because we can catch you up more with the way things really work. Okay, it is a good thing when you hear terms you don't understand, right? So anyways, getting back to the daily note, very, very brief, nothing quantitative at all. Discretionary look across many markets. It's not unique to us. Most firms have a daily note, right? Short-term interest rates, we look at the first red. We're bearish on price, bullish on yield. And I phrase that way for people who are new. Generally, professionals don't talk that way. But we're bearish on price, bullish on yield, right? Just because sometimes new folks don't understand sort of the nuances there. Overall risk, we've been risk off for a while. Bearish on U.S. equities this entire month of March. And we just go down stuff, right? What do we see in the term structure? What? How to trade the spreads or flies in the... No. Nothing that involved. Very, very, very dumb and brief. And even this, with most professional firms, is far too developed. I think sometimes I need to simplify it a bit. Crude oil term structure. Gold and silver. So we remain bearish on gold prices. We remain bearish on silver prices, right? And then personal notes on just a few things we're looking at. So my point in saying all of this is we do this every day, right? That's not our positioning. We send out a welcome email that gets ones used to the GTC sample portfolio and encourage ones to ask questions beyond that GTC sample portfolio if they're thinking something. Like this question, right? Are you bearish or bullish? No. See, when people ask me about my thoughts on the economy or macro, sometimes how can I say this? It's something that's very, very difficult for me to explain. This has nothing to do. It goes back to this paragraph right here, right? So if you come down to this paragraph right now, right here. What is the reason and rationale behind the daily note, the position review, and the daily trade log? You can find an entire entry on this topic. And in that topic, I struggle explaining this. You can find another comment on that topic here at this link to this tweet on X. The daily note, rather than a trade strategy view, instead provides a discretionary view of the state of markets across multiple markets in an attempt to understand the initial conditions of right now of econometric data. The daily note and the weekly note, which has all the graphics with it, the daily note is all about building market awareness through the discipline of watching econometric data and markets almost every day. So, going back a few moments, I said, people will ask me my thoughts on the state of the economy. And it's like, well, if you look at the first red, right, and you're looking at gold right now, and then you look out the treasury curve, I think that tells you. And they're like, man, how do you know all of that? How do you know all of that? Dan, are you some sort of innate genius? No, I'm not. I look at it every frickin' day, all right? It's because I force myself, and all other firms and all other people out there force themselves to look across the markets that are important to them every single day through a rigid process so they get an idea of the environment they're trading in. So you base trades off of this? No, not really, not at all. And see, this is where we start getting to the area that it's very, very difficult for me to explain to people how important it is to do this. It really, really is, because, in 2008, actually, I think almost 2010 would be a better example. But 2008, if you were just going off of technical signals and you weren't talking to guys that worked at a JP Morgan desk and said we were all just let go, and it's like, what's going on, right? And you didn't understand the environment you were trading in, and you see a double bottom, do you know what I mean? It's like, do you really want to get long right now? Really? Or are you only looking for shorts? Or are you only biased to shorts? I'm not saying I trade macro. I don't. I want to know the environment I'm trading in. You know what I mean? I want to know when I'm in the Midwest of the United States and I look up and the sky is like this gray-green color. I want to know that before I start planning a picnic. I mean, do you know what I mean? like something's wrong. Like maybe this is not the best time to implement this, right? Now at 3 o'clock we have something completely and totally different. Sometime around 3, most days, not every day, but most days we have a review of the portfolio and all specific trades. And I'll tell you, when you look through this post every day, you're not going to see a thing about macro. You might once or twice. See, this is where it gets difficult for me to explain this. We're trading very, very, very linear adjusted for a linear return profile. All of the models, all of the programs are adjusted for a very, very linear profile. We are not targeting absolute returns in any way in this environment. We haven't been for a long time. And here on March 27th, 2026, do you see why? Dan, why are you guys targeting linear returns rather than absolute in this massive rally? It's like, oh, gee, I don't know. All right, look at why did you go risk off and we're posting jokes on X about, like, from margin calls, sell it all today, right? On March the 3rd. You want to know why? Because this right here. Because I'm watching the environment. Daily note is about watching the environment, right? And some of that is with gold and silver. What's gold and silver doing, right? What's interest rates doing? What's the first red doing? What's the 10-year doing, right? What are emerging markets doing? What is emerging market debt look like at the moment? What does high yield look like at the moment? We look at all of that, right? And that sort of gives us, over time, an idea thing. I was like, okay, so you look at that every now and then? No, I look at it every single day. And the pain in the butt of going through the monotony of doing a daily note every single day cements it in my head. Does that influence your trading? Yes. Does it influence your trading? No. It's a very nuanced thing, and it's very, very difficult for me to explain it. Me, the teacher, right? It's very difficult for me to explain it. Now, as far as specific trades and what we're doing, that's here, right? And yes, and again, this is monotonous. But this is something that every single professional on planet Earth does all the time. We're not trading for excitement. We're not trading lottery tickets. We're not trading HODL and YOLO. We're trading to survive and make money. All right, so we go through each program every day, the equity fixed income hybrid core model that we've developed, or the program we've developed. We go through the long short valuation account, right? That's in our 100% neutral carry program at the moment. That's tuned to 100%. We've been short this entire month, the S&P. Very scalable, by the way. And in the short-term trading account, we have what? We've now changed that to we've got a carry on. We allow some space for discretionary trades, which we have none at the moment. We allow some space for options trades, which we have none at the moment. We've got something that something I've come up with. It's called the 10-year delta skew arbitrage program. It can be used as a model or a program. Those are two different things. And we talk about the positioning, like per $1,000, this should be exactly how we are positioned. And you can follow along and see how that works out. And we've got grids on a spreadsheet and the whole 9 yards, right? That's not even developed as it can be because we tune the percentages differently according to the environment we're in, right? So it's been doing one thing for a while, which has been making money. There's a lot more that can be done there with options that we haven't gotten to yet, which we'll get to in the future when the environment changes, but the environment hasn't changed, right? And then we've got the quad program, something developed specifically for GTC traders in the short-term trading program that's made up of 4 different models, right? So there's 4 models that make up a program. And we go through the positioning in every single day. Well, where's the gold? The gold's not in there. Do I have gold models and gold programs? Yep. Are they in here now? Nope. Right? When you get that welcome email, you'll see all of the entries and exactly it catches you up to a lot of our thinking. Okay, so I hope that explains it. Do I have short positions? No. Do I watch gold and silver every day? Yes, because I want to know the environment I'm trading in. I want to know when I sit down to plan for a picnic, should I plan for a picnic, or if am I in the middle of Ohio and the sky is like gray-green color at the moment, right? It's the same thing in markets. Is a storm brewing, and maybe I shouldn't be thinking that way. And one of the things you have to do is you have to look across multiple markets. Do we talk about exact trades? Absolutely. On a sample portfolio? Absolutely. Right? Every position. Like in the quad program, right? If you allocated $3,000 to the quad program, here's how we would split that up. And we talk about the positions every single day. It's boring. It's monotonous. It's not HODL. It's not YOLO. It's not green indicator and red indicator. It's based on things that are actually real and how professionals actually think about positioning. And sometimes it's not exciting. It's boring. That's why we make money. Sometimes it is exciting, right? Sometimes it's not. But it is disciplined. So this is a message sort of for everybody, right? So this is going out to just everybody. And yeah, we're tuned to a linear profile right now. We're not looking for 20 to 60% years. We're just not. Okay. If you have any other questions on this, please feel free to ask. This has been what it always is, right? Our thoughts are good until we cancel our thoughts, just like the order. They are good until canceled. We're going to put this one out there for everybody. Okay. Professional firms act the way they do because it works. And we think about markets in what's referred to as Markov or non-Markovian. We think of markets very often, very, very often, sort of through a lens of what is the state right now, and that is all we care about. Well, what do you think about you're going to do this or that, or what happens? Okay, well then we'll adjust when that happens. But for today, we're bearish on that periodicity. That's also I could go on, and I'm gonna stop myself. For right now, that's been our thoughts. Hopefully that answers the question. It's very nuanced, I know. I hope I've been more clear than mud, but that has been our thoughts, and our thoughts are good until we cancel our thoughts, just like the order type, because you always have to be flexible and adaptable in markets. And that has been what it's always been. It's simply been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.